Hey guys, if you want to be a profitable trader in 2025, you need to do this one thing. All you need to do is just... Yeah. We've all heard that before. The truth is, being a trader is not easy. There's not just one thing you need to do. There are a lot of skills to work on, both technically and psychologically. But today, I'm going to go over one of the most important things a trader should do that will help in both areas. It's something you've probably already heard of, but many unprofitable traders just brush it off. They don't think it's that important, or they just don't put that much effort into it, when it could be the thing that takes your trading to the next level. And I'm going to show you how it's done. I'm going to go over all the important aspects and give you a detailed step-by-step guide so you can do it yourself and take your trading to the next level. So what am I talking about? The dreaded word that no trader likes to hear: backtesting. Yes, backtesting. So before we get into it, I want to first talk about why you should backtest and how it's going to help your trading. I want you to close your eyes for a second and imagine your favorite athlete. It could be your favorite football player or basketball player or whoever. Someone great who shows a lot of skill. Imagine them maneuvering around their opponents. They dribble the ball past other players seamlessly and flawlessly execute to score. That only happens on game day. Imagine the countless hours they put in during practice every single day. Day in and day out, they're doing drills. They're practicing plays. They're practicing passing the ball. They're practicing their shots. They are working tirelessly to improve themselves. They know what it takes to be at an elite level. Now open your eyes. Find a mirror. Look at yourself. Stare into your eyes. What can you do to improve your trading? How can you execute on an elite level? What are you willing to do for that person in the mirror? I hope I was able to motivate you, because for some reason, many traders refuse to backtest. They know it's good for them, just like how exercise or eating healthy is good for them, but they still don't want to do it. If you're willing to commit to improving yourself first, smash that like button, subscribe to this channel, and let's get started. Okay, so enough with the motivational speech. For the rest of this video, I'm going to make it very boring. If you're serious on getting better at trading and you're able to make it to the end of this video, I'm sure you'll put it to practice and you'll eventually get there. But if you do end up clicking away, I hope you will come back again and give it another try. Okay, so I've given you a lot of reasons to backtest, but two practical reasons are: number one, test whether or not a strategy is profitable. If you have a new strategy you want to use, well, before you start risking your money, you should first find out if the strategy will even work. Don't think just because it works for someone else, it's going to work for you as well. You guys are different people, different personalities, different traders. You'll want to backtest for yourself to see if you'll find success. Second reason, to build conviction through practice. Just like how athletes have to practice to get good, us traders, we need to practice as well to get better in our trading. Yes, we can practice by paper trading live data. I'm not saying to not do that, but backtesting gives us the advantage of being able to go through a lot of data in a short amount of time, so we can improve at a much faster rate. Also, I say we're building conviction because through countless repetitions, that's how we're able to execute without fear when the time comes. Unless you see it over and over again, you're not going to believe in the strategy and you'll get fearful when it comes time to execute, and that's where mistakes will be made. So, how to backtest? Well, I'm going to break it down to a simple 3-step process. The first step, which you'll only need to do one time, is to build a model. I will go over how to do that, and I will give you an example in this video, but I don't want you to copy me exactly. Take the strategy that you're interested in and use that to tailor a model for yourself. Next is to actually backtest the model. This is going to take the most time and will be the most repetitive, but the repetition is what's going to help you build confidence. So it's important to take your time here and do it correctly, and don't rush. I will demonstrate this as well. Finally, you need to record and review the data. You actually need to create your spreadsheet first before you start backtesting. That way you know what variables you want to keep track of and what you want to record when you backtest. I'll show you the data I like to record, and you can add or remove anything you want for your data. And reviewing, you can just do that at the end, or if you want, you can do that periodically. But reviewing is going to make you realize the success of the strategy and will help you deal with taking losses if the overall strategy is profitable. Okay, so like I said before, don't copy this model exactly. You need to find something that works for you. I'm showing you an example to give you ideas of important things to consider in your own model. The first tip I'm going to give you is to keep it simple. Remember, you'll need a lot of repetitions, at least 100 trades or a year's worth of data. So by keeping it as simple as possible, you'll make it easier on yourself. Time. When will you trade? The most common mistake that traders make when backtesting is not considering the time. This is the most important thing to think about. No way are you going to be trading 24 hours. Asia session, London session, New York morning session, New York PM session. Even if you do, you don't want to mix the data up. You need to consider your own schedule and what time are you realistically trading in the market, and then backtest that time only. Then the next thing I'll go over is the setup. What criteria do you need to check off before getting in a trade? Is there a certain market condition? Do you need to see certain candle patterns or an indicator signal? Basically, a checklist of what you need to see before getting into a trade. And you want to make this as specific as possible. You don't want to make decisions on the fly. Oh, this is kind of like it, but not exactly. I can make an exception for this. No. You don't want to do that. If you do that, your data is going to be off. Same thing with your entry. You want to be specific on where and how you're going to enter. And the same thing for the risk. You want to be consistent on how much you're going to risk and where your stop loss is going to be. Now I'm going to show you an example model, but remember, don't copy it exactly. I'm not trying to push a certain strategy or a specific model onto you. This is just an example. I'm highlighting the process so you can use it to build a model with whatever strategy you like. So for this example, I'm going to use the NASDAQ micros Monday through Friday, no holidays. This doesn't mean I will be trading every single day, Monday through Friday. Those are just the days that I will go through in my backtesting looking for a setup. If I don't see it, I won't trade that day. I'll only look at the New York AM session, specifically from 7 a.m. to 12 o'clock noon. Now the entry time is actually flexible, but ideally I want my entries between about 8 o'clock to 11 o'clock. Normally I pay a lot of attention to the economic calendar, but to keep the backtesting simple, I'm going to ignore it. But I will still keep in the back of my mind that at 8:30, 9:30, and 10 o'clock are the most common times where we're going to have the most volatility. Also, I won't be backtesting the first Thursday and Friday of each month due to non-farm payroll. And I want to be finished when my targets are hit or if we get to around 12:15. Okay, so now let's get into the setup criteria. I'm going to use the weekly, daily, and 4-hour as my higher time frame charts. These will be used to determine my bias or the direction I will be trading. I don't want to constantly be thinking, should I go long or should I go short? This will help keep it simple and let me focus only in one direction. Also, I want to note nearby PD arrays on this time frame, especially ones above a swing high or below a swing low. I want to use these as liquidity pools for my targets. I will use the 1 hour and 15 minute as my intermediate time frame. I want to know equal highs and lows and inefficiencies in these time frames. And one of my criteria on my checklist will be a liquidity sweep. This is where price will either sweep equal highs or lows or a singular high or low into an area of inefficiency. And if it sounds confusing, don't worry, I'll make sure to demonstrate it later on. The lower time frame is where I will be executing. Again, I'm keeping it simple and I'm just going to stick with the 5-minute time frame. The next thing on my checklist will be displacement. Now this is a little subjective, so I'm also including market structure shift here to smooth out any ambiguity. But typically, Displacement will create fair value gaps, so if I see fair value gaps, then most likely I will consider it to be a displacement. Now for the actual entry, I'll use either a fair value gap or a breaker. For you, I would recommend just picking one thing. That way your data will be more consistent. But for me, I want to give myself a little bit more flexibility, but I do understand that my data will be a little bit more inconsistent this way. Another rule, I'm only going to enter if the risk is not too big. So I want to make sure to measure my risk before placing a trade. I'll talk about risk in a moment, but I want to mention that this model is influenced by ICT's 2022 mentorship. However, you can easily adopt a model from the 2024 mentorship using opening range gap or midnight opening range, for example. So now let's talk about risk parameters, and this is one of the most important parts of trading that new traders always get wrong. Most traders just think risk is how much you're willing to lose on a trade. However, risk includes much more than just that. For example, this model, I'm going to have a maximum of 2 entries per day. If I take 2 losses, I'm going to stop for the day. Also, if I get 1 winning trade, I will also stop for the day, even if I took a loss earlier. Risk limit, you can call this risk amount or whatever, but this is what I was talking about in the previous slide that dealt with my entry. I will have a maximum risk of 1% of the current balance on the first trade. If I take a loss, then this drops to 0.5% if I do decide to take a second trade. Now this is just the maximum. I'll try to get as close to this as possible while still staying under. Next, now this is not really a risk limit, but I put this here because I need to consider the reward to risk ratio before taking an entry. The minimum must be 1-to-1 for the first partial. Now, where I take a partial is a little subjective, but it'll typically just be the next minor pool of liquidity that I can see. Now, going a little further, I may have targets beyond the first partial where I'll take a second partial or even a third partial. So I will need rules for those scenarios as well. So on the first partial, I will take off half of my position and move the stop loss to break even. So before this, I'm not touching the stop loss. Then on the second partial, if I still have a position, I'll take off another half and move the stop loss to 3 PD arrays of protection. Again, a little subjective, but it'll be 3 PD arrays that I can see. Now, if I still have a position, my third partial, or if I reach the higher time frame target, one or the other, I'm going to close out my entire position. There may be cases where the second or first partial is the higher time frame target. If that's the case, then I will also close my position. So as you can see, there's a lot more that goes into your risk management than just how much I want to risk on a trade. What you see here, kind of the minimum, I would say, of the rules that you should have. You can add more rules for yourself if you're struggling with a certain aspect, but it'll be different from trader to trader. These rules here, I would say, is pretty generic, and you can still tweak these to suit yourself. Okay, so I've walked you through an example of how to build a model. If you made it to this point in the video, you guys are doing great. Hit that like button right now so I know you've made it this far. We still have to go over actually backtesting the model and recording the data, but this video is getting kind of long and we've already went over a lot of information. So I think this is a good point to take a break and give you some time to think about your model. What time windows do you want to look at? What criteria do you need for a setup? How are you going to define your entries? And what are your risk parameters? So take some time, think about it, then come back to this playlist. I'll have the next video in here where I demonstrate backtesting this model that I just gave you. And I will go over some of the important data that you should be recording. So make sure you come back, but until I see you guys next time, safe trading.